Hi everyone. So Trent has fallen more than 40% since October 2024 and it is still trading currently at the range of 5,000 rupees. And also recently in the mutual fund allocation changes in June 2025. So in the Motilal Oswal Midcap Fund, they have increased their current allocation from 3.7% to 9.3%. So today in this video, we will try to understand that why Motilal has increased their allocation in this company, also why it has been falling since last few months, and we will also look at the future prospects. So Trent is currently one of the leading Asia fashion retailer company, and do you know why are they one of the leader in this segment? So the reason is they have a very good supply chain along with good design capabilities, and they also operate in a owned and franchisee store model. So currently there are two key formats in Trent. So the two key formats they have is the West side and the Zudio, and in the West side we can see that they operate in the mid to premium positioning and majorly they focus on the women's wear. And the second key format they have is the Zudio. Within that they are one of the affordable fast fashion company. Now Trent also have a grocery hypermarket chain which is also known as Star Bazaar, which is a 50-50 JV with Tesco PLC, which is a UK company. And currently Star Bazaar is a very small revenue segment in the company, and along with that they also have a 49-51 JV with Inditex for Zara stores. And even if we take a look at their future prospects, they're also looking into new categories like innerwear, beauty and lab grown diamonds. So lab grown diamonds is something unique which I also got surprised while reading about this company. So currently in the premium apparel segment, they operate 23 stores of Zara, where the brand ownership and the merchandising is controlled by Inditex. And addition to that, Trent also operate 3 Massimo stores. So currently Trent is owning 20% of it, but earlier they used to own a 49% stake in the Massimo, and in Feb 2025 they decided to sell their 29% stake for 20 crore rupees. And now if we take a look at their shareholding pattern, so currently promoters have 37% stake, FIs are holding 19.6% stake, and DII has 17.2% stake in this company, where Motilal Oswal has increased their stake to 9.3% in June 2025, and public is holding 26% stake. And even if we take a look at their emerging categories, which is the innerwear, beauty and the footwear segment, so that is currently consisting 20% of their revenue. And even if we take a look at their beauty segment, the revenue of units sold, which was 2 million in FY21, it has increased to 81 million in FY25. Even if we take a look at their innerwear, it has increased from 4 million in FY21 to 50 million in FY25. And lastly, if we take a look at their footwear, which was 3 million in FY21, now it has increased to 27 million in FY25. So that's a very huge growth we are witnessing in the emerging category segment. And now let's come to the next part, where we will do the financial analysis and the peer comparison in this industry. So here if we take a look at their income statement, so in FY25 they made a revenue of 17,130 crores, and it is expected that in FY27 they will make a revenue of 26,496 crores. And even if we take a look at the revenue growth estimates, so it is 28% in FY26 and 20% in FY27. So that is a more than 20% growth in next 2 years. And now if we take a look at their EBITDA and EBITDA margins, so currently their EBITDA is 2,750 crores, and it is expected that it is going to be around almost 4,300 crores in FY27, currently with the EBITDA margins of 16% in FY25, and it is expected to be around almost the same of 16.2% in FY27. And even if we take a look at their EBIT, which is currently 1,854 crores, it is expected to be around 3,017 crores. And lastly, if we take a look at their PAT change in the next 2 years and their PAT margins, so currently they have a PAT of 1,534 crores, and it is expected to be around 2,365 crores in FY27, and the expected PAT growth in the next 2 years is 28% in FY26 and 20% in FY27. And now let's take a look at some of the key valuation ratios in the Trent. So first, if we take a look at their EPS, so currently they have 43.2 in FY25, and it is expected to be around 68.3 in FY27. Then if we take a look at their PE valuation, so currently it is trading around 132 PE, and currently they are trading at a forward FY27 PE of 84. And one of the very interesting data point is their EV by EBITDA, which is currently 74.2 in FY25, and it is expected to be around 47.2 in FY27. And now let's come to the next part, where we will do the peer comparison of Trent with other companies in this industry. So here in the peer comparison, I have compared Trent with Vishal Mega Mart, Vedant Fashion and V2 Retail. So Vishal Mega Mart is actually not an apple-to-apple comparison with Trent, but because they have a bigger market cap, so that's why I'm comparing both of these companies also. So if we take a look at market cap wise, so Trent is obviously the biggest company with a 1,88,000 crore of market cap. Even if we take a look at their ROC and ROE, which is taken from Screener, so they have 30.7, which is highest among all the peers, and ROE of 30.1, which is highest among all the peers in this segment. If we take a look at CFO by EBITDA, so Vishal Mega Mart is a clear winner in the CFO by EBITDA with 91%. And next, if we take a look at their PEG ratio, so currently Trent is having 1.8 of PEG ratio, whereas for Vishal Mega Mart, it is 1.4. Whereas if we take a look at Vedant Fashion, so they have 4.9 of PEG ratio, which is very high. And lastly, if we take a look at V2 Retail, which is a very smaller company, but they have a very good PEG ratio of 1.22, which is lowest among all the peers. And lastly, if we take a look at their PE valuation wise, so Trent is currently around 131, Vishal Mega Mart is around 101 of PE ratio, Vedant Fashion with a PE of 49, which is lowest among all the companies, and lastly V2 Retail with a PE of 90.8. So to summarize this table, if we take a look at the ROC and ROE wise, Trent is a winner over here. If we take a look at the CFO by EBITDA wise, Vishal Mega Mart is a clear winner over here. And if we take a look at the PEG ratio wise, V2 Retail is a winner over here. And now let's come to the next segment, where we will see the number of stores they currently have and they're expecting in the coming future. So first, let's take a look at the Zudio segment. So currently they have 765 stores and they have added 220 stores in FY25, and it is expected that they are going to have around 1200 stores and they are going to add 220 stores in FY27. And even if we take a look at the geographic presence of the Zudio in India, so currently they have 16% stores in Maharashtra, then 15% in Gujarat, 11% in Karnataka. So these are the three major states that are currently operating in India. And now if we take a look at the next segment, which is the west side, so in FY25 they currently have around 248 stores and they have done a new addition of 16 stores, and it is expected that they are going to have around 280 stores in FY27 and they're going to add more 15 stores in FY27. And even if we take a look at the geographic presence of west side in India, so it's almost the same data point, where Maharashtra is consisting of 17%, Gujarat is 12% and Karnataka is 11%. And now let's come to the next segment, and we are going to do the analysis of Zara and the Massimo performance. So first, if we take a look at Zara, so it is expected that in FY25 they're going to give a PAT of almost 2.7 billion, and it is expected that in FY27 they're going to give a PAT of 3.3 billion. And second, if we take a look at the Massimo performance, so it is expected that they're going to give a PAT of 0.1 billion in FY25, and in FY27 they're going to give a PAT of 0.13 billion. And even if we take a look at their history, so they were a loss-making company in FY20 and FY21, and they became profitable in this segment from FY22. And now let's come to the next segment, where we will see the data points shared by the management during the last con call. So currently the management is focused on increasing their market share in the micro markets with the help of multiple brands they currently have, and they're also focusing to enter into newer categories. Then the management has also mentioned that they're going to grow 25% annually over the long term. Then the third point, management has said that they're going to see a operating leverage in the coming future, and one of the main reason is the cluster based growth approach they are currently operating in. Then currently their star business has given 25% revenue growth in FY25, where they have done a new addition of 12 stores, and they have also mentioned the challenges they are facing currently in the food and the grocery retail chain, where Zomato and Swiggy, which are the two big players in this segment. So I'm not sure about Trent, that how they are going to perform in this segment, but the management has said that they're very bullish on their star business. And even if we take a look at their current con call data, so they have reported 20% YOY revenue growth in Q1 FY26. Then second, their standalone revenue, which is currently at 5061 crores, in Q1 FY26, which is up 20% YOY of 4,228 crores in Q1 FY25. Then they have also added one new store of West Side, and in the Zudio segment, they have added new 11 stores, now with a total count of 766. And now let's come to the next segment where we will see the risk in this company. So the first risk is the increase in competition we have already seen in the peer comparison. The second risk is the store closure due to underperforming locations or weak operating performance. And the third and the major risk in this company is the Star Bazaar grocery format, where they're witnessing losses in this segment. And now let's come to the last segment where we will do the technical analysis. So since COVID, the stock was in a very good upward momentum, and since October 2024, it made a high of almost 8,200 rupees, and it was that time where Nifty also started to fall down, and here we can see that Trent has fallen down more than 45%, and it made a low of almost 4,500 rupees. So there is no doubt about the company's growth they are expecting in the coming future. But as we can see that one bad quarter or one bad management guidance, it can lead to a big consolidation phase. So in my opinion, the industry is currently facing a very good tailwind, and the growth prospects in this company is looking good for the coming future. So thank you for watching this video. I hope this detailed analysis of Trent was helpful, and write down in the comment section that what do you think about the company, and see you in the next video.